Hello everyone, welcome to this month's video about the progress of my live portfolio. Last month we built on previous results and managed to close the month in profit again. Today we will look at how the portfolio has been performing and what has contributed to its success. Our live portfolio has been running for several months now. Each month it achieves a positive return. This confirms the consistency and strength of a strategy based on solid quantitative principles rather than chance or excessive optimization. In today's video, I will show you the results, charts, and key moments of this month. We'll look at what kept us profitable, the challenges we had to overcome, and what we have planned for the next period. So let's get started. Regarding live results, the open profit is $271. We have a gain of 27.1%, the monthly gain is 5.8%, and the average weekly gain is 1.4%. The maximum account exposure was 6.6%, which means that over these 5 months, the portfolio achieved more than 4 times the maximum exposure. The number of profitable trades is 40.9%. The profit factor is 1.45. These metrics are essentially exactly the same as they were in the in-sample results. The portfolio averages 1.2 trades a day, and its history spans 125 days. Here is the profit graph since the beginning of the portfolio. Next, I see the individual sectors and markets of the portfolio. There were 48 trades on the Nikkei. Then there are 30 trades on the Nasdaq. Additionally, %, which means 17 trades on the DAX. So the majority of trades in the portfolio are made on stock indices. Next, I have the precious metals sector, gold, which had 19 trades. And the following currencies are Euro-Yen with 16 trades, Dollar-Yen with 14 trades, and Euro-Dollar with 4 trades. So this is essentially the distribution of markets in the portfolio. The next chart shows what is the duration of the trade in relation to profitability. Here I see that trades are relatively unlimited in profit, and here they are limited by stop loss. As for individual markets, DAX has a profit factor of 1.7. That is quite respectable. On Nikkei, I see that it is experiencing some loss, so in these 125 days, the portfolio, that is the instrument in the portfolio, has not been performing well. The Nasdaq also has a profit factor of less than 1, so it is evident that it is at a slight loss. Basically, when it comes to stock indices, I have found the American stock indices very difficult to trade in recent months, and it's their nature that some half years are better while others are worse. The Euro-Yen and Euro-Dollar have a very decent profit factor. The Dollar-Yen is experiencing a slight loss. and gold has an exceptionally high profit factor. Here we basically have a large number of profitable trades, 16 trades in profit, and only 3 trades at a slight loss. As for directly, in MetaTrader and the charts in MetaTrader, my first chart has a strategy for gold. And when I look at the recent period, I can see beautifully identified supports and resistances and breaks between these values. Basically, the strategy works beautifully. The next chart I have is the euro dollar, and here I see some levels again. Here it was broken, here resistance was broken, and here there were 2 failures. There was just a business report here that pushed the market down a lot for the long position, and I managed to catch this entire long movement. As for the euro yens, I basically have some identified pullbacks here. One of those pullbacks didn't work out for me from that trend. However, I managed to execute a nice short here. The market was supposed to turn long, but I didn't manage to execute that long pullback here. However, I managed it perfectly here. Dollar yen. Basically, he hasn't traded for a while. It must automatically move, and here I have a beautiful long trade, but the second one didn't go well with the trend. So basically, I have some trend watching here. The entry into the short trend here didn't quite work out for me either, but the trade ended up being profitable. Next, I have the Nasdaq. Here is another open position, and it's essentially a long-only strategy. I try to take long positions when there is a higher long volatility. As for the stocks, I have a lovely long breakout here. Here I have a small gain, a small loss. Here we have a breakout of resistance and a lovely long breakout. Last, is Nikkei. And I also see long breakouts on Nikkei. Some places succeed, others do not. I'm essentially making some smaller profits here. I have set very tight stop losses, so it's more or less about some statistics. It's also a long-only strategy. Regarding the analysis of that portfolio over the weeks, since positions are always based from Monday to Friday and are closed over the weekend, it allows for a nice analysis of those individual weeks. In that year, there are recurrent weeks that are very strong, and then there are weeks throughout the year that are loss-making, and these weeks are randomly distributed and not recurrent. To summarize, the multidimensional analysis of our business portfolio suggests several clear recommendations for the coming period. Firstly, we will continue to leverage weekly seasonality. Breakout weeks with strong profitability are consistent and have been confirmed over the last 7 years. During these periods, it is worthwhile to increase volumes. At the same time, we want to avoid weak and randomly loss-making weeks. In such cases, we prefer to reduce risk and limit exposed strategies. An important trigger for performance remains volatility, particularly in markets such as DAX, Euro-Yen, Dollar-Yen, or gold. High volatility strengthens our breakout strategies, while low volatility is a signal for caution. We are adding a connection between predictive models and the calendar of macro events to better time our entries. We mitigate loss risks through diversification, such as combining uncorrelated pairs like Euro-Dollar with stock indices. This helps us maintain stability even during crisis weeks. And most importantly, these conclusions apply not only to historical data. Out-of-sample tests from the years 2024 to 2025 confirm that the strategy maintains a stable Sharpe ratio, profit factor, and win rate, even higher than during the training period. In other words, we have robust, adaptable systems that operate in real market conditions, and that is the foundation for the further growth of our portfolio. Thank you for watching, and we will see you next month with more results.